DeFi is the talk of the town now, but what exactly is DeFi? Welcome back to our channel, where we sieve through complicated crypto topics, summarize and break them down into bite-sized videos that are easy for you to understand. In today's video, we are going to talk about decentralized finance, or DeFi for short. To explain DeFi, we will first need to explain what is centralized finance, or CeFi for short, before we jumped into what is DeFi? Why is DeFi useful? Components of the DeFi financial ecosystem, the benefits of DeFi, and the risks of DeFi. In order for lawyers to not come after us, we need to remind you that whatever information we share in this video is purely for education purposes. Before we continue, remember to hit the subscribe button and the bell icon so you don't miss any of our videos. Let's get started. What is CeFi? CeFi is a combination of the two words centralized and finance, the traditional financial system we are accustomed to, which are the banks, the financial institutions, and the services built around money. Examples of such services are money transfers, loans, savings, interests, insurances, stock markets. All these banks and financial institutions have a centralized authority in charge, and these authorities control the flow of money. CeFi can charge you hefty rates, up to 500% for payday loans, just because that's the only legit way you can borrow money. The power is in their hands, so they can actually print money, limit you from borrowing, depositing, transferring, or investing money. We know we sound like we are painting them like a tyrant, but in an exaggerated way. They can even take your money and deny it because who is to stop them? You have no control or proof. This is where we welcome DeFi. What is DeFi? DeFi, as you would have guessed correctly, is a combination of decentralized and finance. It is a collection of financial services without a central authority. DeFi is everything you can do with a traditional bank, but without a bank. A faster speed, cheaper costs, and with more transparency via implementing smart contracts on public ledger blockchains. Why is DeFi useful? Do you know that 1.7 billion people worldwide have no access to financial services? Not only that, it is hard to reach everyone as financial infrastructures are not readily available to people. DeFi is open to anyone and for everyone without third parties like banks or financial institutions. It is a movement towards a new financial ecosystem. DeFi is achieved by using blockchain technology, cryptography, and smart contracts. Watch our videos on these topics for a better understanding. Link in the description below. Side note, a lot of the DeFi projects are built on Ethereum because of Solidity, a very powerful programming language developed to write complicated smart contracts needed for DeFi applications. Components of the DeFi financial ecosystem. Let's say we are on planet X, where there is no such thing as governments or a central authority. We Martians are happy coexisting. However, we have just one small problem. We need a system for trading our Martian stones and food with one another. Thanks to our exploration on Earth, we found out Earthlings have this complex CeFi ecosystem, which allows them to do so many things, and we plan to follow them. But since we Martians are a trusting and smart society, we decided not to have someone in charge. To replicate Earth's CeFi financial ecosystem, the first thing our Mars DeFi will need is a decentralized infrastructure system to program and run decentralized services. Ethereum blockchain is one example where we can do that. Next, we need money. We do not use Ether even though it is Ethereum's digital currency because Ether is very volatile. We need a more stable digital currency like stablecoins so as to build a reliable DeFi ecosystem. Stablecoins are pegged to real-world assets like the US dollar. One such example is DAI. Now that we have decentralized money, we can create some decentralized services. This is where decentralized exchange or DEX comes in. DEX is a place where we can buy, sell, and trade other cryptocurrencies without an operator. There is no need to sign up for an account or go through identity verification. The popular ones are Uniswap or PancakeSwap, which have probably hundreds and hundreds of tokens. Another DeFi service is lending and borrowing. An example of one such is Compound. This platform allows users to deposit cryptocurrencies to earn interest. This is called yield farming. And if they want to borrow another currency, they can use their deposited assets as collateral. All these are done automatically via smart contracts. Another popular project is Aave. The next DeFi service is derivatives. They are contracts that derive their value from the performance of an underlying asset, like gold or precious Martian rocks. Synthetic is an example of a derivative DeFi project. Margin trading is also another CeFi service that can exist in DeFi too. Projects like DYDX and Fulcrum allow us to borrow funds to increase our position in an asset. In CeFi, we will need to go through identity verification and fund our account with a few $1,000s before we can do margin trades. DeFi does away with all these restrictions. There are bound to be risks with all these DeFi products. DeFi insurance is the solution for that. It guarantees compensation if someone pays a premium. All this happens autonomously because of, you guess it, smart contracts. Popular projects in this space are Nexus Mutual and Open. The benefits of DeFi are huge. Decentralization, free for everyone. Flexibility. Interoperability, which is the process where products and systems can readily connect and exchange information. Open, permissionless, transparent. With benefits comes risks. One of the main risks are bugs in smart contracts. Hackers have found ways to exploit loopholes in smart contracts, where people did not correctly define the rules for certain services. Protocol changes can also affect the existing contract. We can lower this risk by taking up insurance. Cryptocurrencies are volatile. These decentralized assets can experience drastic drop in value and may have a cascade of liquidations across many DeFi protocols. A DeFi service may not be really decentralized. A system is as decentralized as its most centralized system, which may be the project's downfall. Always check the shutdown procedure before you invest into a product or a service. DeFi is a vibrant and interesting space with a lot of opportunities and value. As it is in its infancy stage, there are risks involved. But high risks also means high rewards. Always research carefully. Understand how a product or service works before you invest. We will cover more DeFi projects in our future videos. So subscribe to our channel and hit the bell icon so you don't miss out on our future crypto-related videos. Don't forget to smash the like button. See you in our next video. Take care and stay safe.